Assalamu'alaikum. Hello everyone. Thank you for clicking this video. In this video, we will talk about PSAK number 109. Before that, allow me to introduce myself. My name is Elin from the study program of Islamic Economics and Finance, University of Education Indonesia. This topic is included in the Islamic Welfare College material in our study program, which was sectioned by Mrs. Rida Rosida, Bachelor of Science degree and Master of Science degree. Also, thanks to my partner, Shevila Puspita, who wrote the script, and Elin, who edited this video. No need to linger longer, let's just get into the discussion. Check this out. Financial reporting of Zakat Management Organization based on PSAK number 109, including regarding assets under management and Amil's financial statements. With the first topic is overview of Zakat Management Organizations or OPZ in Law number 23 year 2011. The issue of Zakat Management and the Zakat Management Organization was initially regulated in Law number 38 of 1999, but because the law was deemed irrelevant to the development and legal needs of society, the law was refined into Law number 23 of 2011 concerning Zakat Management. Topic number 2 is role of accounting information system for Zakat Management Organizations. According to Statement of Financial Accounting Standards number 45, non-profit organizations are organizations that meet the following characteristics. Entity resources come from donors, produce goods and or services without the aim of generating profit, and no ownership as is usual in business organization. Topic number 3 is 3 pillars of Indonesian Financial Accounting Standards or PSAK, with first pillars is General PSAK is a financial accounting standard that regulates entities that have significant public accountability, namely entities registered with capital market authorities and entities that control assets in a fiduciary capacity for a large group of people, such as banks, insurance brokers, pension funds, mutual funds, and banks investigation. Second pillar is Sharia PSAK, regulates Sharia-based transaction accounting for both Sharia entities and general entities. The reference for the Sharia-based transaction is the fatwas issued by the DSN MUI. Sharia PSAK is not an independent PSAK but complements the general PSAK based on IFRS and PSAK etap. Third pillars is PSAK etap, or it can be called PSAK for entities without public accountability. Is an accounting standard that stands alone and does not refer to general PSAK. Mostly uses the historical cost concept, regulates transactions that are commonly carried out by SMAs. That form of regulation is simpler in terms of recognition, representation, and disclosure, and has remained relatively unchanged for several years. PSAK etap is applied by entities without public accountability, namely entities that do not have significant public accountability and issue financial statement for general purposes. Topic 4 is accounting for zakat and infak or alms based on PSAK 109. This accounting standard currently applicable and used by OPZ as a guide in its accounting and financial reporting is PSAK number 109, issued by the Indonesian Institute of Accountants or IAI in 2010. Topic number 5 is transaction regulated in PSAK 109. Basnas and LAS regulate transaction reporting and recording for the collection of zakat, infak, and alms funds received by Amil parties from muzaki or donors. Then regulate transaction reporting and recording for transactions carried out by Amil parties when distributing zakat, infak, and alms funds to mustahik parties. The process of Basnas and LAS activities is as follows. In point 1 is source of funding obtained from represented by entity or company zakat and corporate CSR and directly by muzaki in the form of zakat, infak, alms funds, and other religious social funds or DSKL. Point 2 is distribution in accordance with Asnaf Zakat to Empowerment Program in the economic education or scholarship, health, social and business sectors, and humanity program. Topic 6 is benefit of PSAK number 109 to Amil. Based on paragraph 30 KDPP-LKS is stated that the purpose of financial statements is to provide information regarding the financial position, performance, and changes in financial position of an Islamic entity that is useful for a large number of users in making economic decisions. The objectivities are as follows. In point 1 is improving compliance with Sharia entities or Amil to Sharia principle in all transaction and business activities. Point number 2 is provide information on assets, liabilities, income, and expenses, which is not in accordance with Sharia principle if any and how the funds are obtained and used. Point 3. Provide information to help evaluate the fulfillment of Sharia entity responsibilities or Amil to the trust in securing funds and investing them at the reasonable level of profit. And last point, provide information about the level of investment returns obtained from investment and owner of temporary shirkah funds and information regarding the fulfillment of the obligation of the social function of Sharia entities, including the management and distribution of zakat, infak, alms funds, and waqf. Topic number 7 is types of funds regulated in PSAK number 109. Point 1 is Amil fund, namely the Amil share of zakat and infak or alms funds and other funds designated by the giver for Amil. Amil funds are used for the management of Amil. Point number 2 is infak or alms fund, namely fund originating from the government infak or alms fund. Point number 3 is zakat fund, namely funds originating from zakat receipts. Topic number 8 is cash management Amil must have in accordance with PSAK number 109. Cash management managed by Amil must have two parts. First, namely cash in hand consisting of zakat cash, alms fund cash, waqf cash, and Amil cash. The second is the cash in the bank, which consists of zakat accounts, infak accounts, waqf accounts, and Amil accounts. Topic number 9 is asset management. Assets under management are facilities and or infrastructure provided by zakat assets and particularly under the management of the manager as representative of zakat mustahik, while the benefits are intended for the zakat mustahik. In general, zakat funds are channeled directly per individual or family to mustahik, either in the form of money or goods for basic needs. However, in the managed assets, the incoming zakat funds are not given directly to individuals but are managed by mustahik representative. For example, building land, non-consumable goods, or the construction of a stall for the mustahik. Then, these assets can be used together and the useful life is longer. Topic number 10 is asset management legal provisions. The law for distributing zakat assets in the form of managed assets is allowed with the following condition. Point 1 is there is no urgent need for mustahik to receive zakat assets. Point number 2 is the benefits of managed assets are only intended for zakat mustahik. And point number 3 is for those other than mustahik zakat, it is allowed to use managed assets that are intended for zakat mustahik by making reasonable payment to serve as benevolence funds. Topic number 11 is asset management category. Number 1 is donation in the form of facilities and infrastructure managed by Amil and the benefits are given to mustahik. Number 2 is revolving receivables from infak or alms funds. Assets under management are divided into two, namely currently assets under management, where assets under management are under the management of the Amil for less than 1 year, and assets under management, and non-current assets, where assets under management are under the management of Amil for more than 1 year. Topic number 12 is Amil Financial Report. Amil's financial statements consist of 4 financial statements, namely statements of financial position, activity reports, cash flow statements, and notes to financial statements. Previously, reports on changes in assets were included in the financial statement of Amil, but now it is no longer because not all Amil entities distribute zakat, infak, and alms funds through assets under management. Information related to financial assets will be included in the notes to the financial statements. Amil Financial Report number 1 is Statement of Financial Position. This statement of financial position is prepared by Amil entities by taking into account the provisions contained in the irrelevant PSAK and ISAK, but not limited to the following items. Point A is assets. Assets in the statement of financial position of Amil's financial statement consists of cash and cash equivalents, receivables for distribution of zakat, receivable for distribution of infak and alms funds, al-Qard al-Hasan, fixed assets, intangible assets, and assets under management. Point B is liability. Liabilities in this report consist of liabilities for distribution of zakat, liabilities for distribution of infak and alms, and liabilities for employee benefits. And point C is net assets. Net assets consist of zakat funds, infak and alms funds, and Amil funds. Amil Financial Report number 2 is Activity Report. Activity reports prepared by Amil entities consist of zakat, infak, and alms funds management activities by taking into account the provisions contained in the relevant PSAK and ISAK, but not limited to the following items. Point A is zakat fund. Zakat funds consist of income originating from zakat receipts from personal muzaki, zakat received from company muzaki, and the impact of remeasurement of zakat assets. Then, there are expenditures, which consist of distributing zakat to Amil, distributing zakat to non-Amil mustahik, starting balance of zakat funds, and ending balance of zakat funds. Point B is alms infak funds. Alms infak funds consist of income from acceptance of infak and alms with restrictions or muqayyadah, receipt of infak and alms without restrictions or mutlaqah, and the impact of remeasurement of infak and alms assets, as well as a result of infak and alms asset management. Furthermore, there are expenditures which consist of distribution of infak and alms with restrictions on Amil, distribution of infak and alms with restrictions to beneficiaries, distribution of infak and alms without restriction to Amil, distribution of infak and alms without restrictions to beneficiaries, initial balance of infak and funds and alms, and the final balance of infak and alms funds. And point C is Amil funds. Alms funds infak consists of income from Amil share of zakat receipt, Amil's share of infak and alms receipt, and other income. Then there are expenses, which consist of employee expenses, other expenses, the beginning balance of the Amil funds, and the ending balance of the Amil funds. Amil Financial Report number 3 is Cash Flow Statement. Cash flow statements prepared by Amil entities in accordance with PSAK 2 regarding cash flow statements, other PSAK, and the relevant ISAK. And Amil Financial Report number 4 is Notes to Financial Statements. The notes to the financial statements prepared by the Amil entities are in accordance with PSAK 101 regarding the presentation of Islamic financial statements, other PSAK, and the relevant ISAK. And we're entering the last topic, that is study case of fiqh analysis and Sharia accounting for assets under management from zakat funds. Based on the table above, there are 3 OPZ that have managed assets sourced from zakat funds. Referring to fatwas of DSN MUI number 14 year 2011, the use of zakat funds may legally be used for distribution in the form of management asset. based on the opinion of Imam Zainuddin bin Abdul Aziz Al-Malibari in the book Fathul Mu'in as quoted in Fatwas of DSN MUI number 14, year 2011, and the opinion of Imam Al-Ramli in the book Syarah Al-Minhaj G. Al-Narawi as quoted in the Fatwas of DSN MUI number 14, year 2011, which explain the distribution of zakat funds or assets for the poor to meet their basic needs, and it is possible to purchase assets for them. So, from the two opinions of the Imam above, it becomes a guideline of reference that the distribution of zakat funds is the form of procurement of managed assets whose benefits are for mustahik is permissible. Procurement of managed assets from zakat funds in the table above in the form of houses, land, building, etc., which are managed by OPZ will greatly assist mustahik in their survival. Furthermore, from the perspective of Sharia accounting, the distribution of zakat funds in the form of managed assets is adjusted to PSAK number 109. In the distribution of zakat, it is stated that zakat funds distributed in the form of acquisition of fixed assets or assets under management, for example, are hospital, school, ambulance, and other public facilities. This is in an accordance with the managed assets owned by OPZ in the research object, namely Las Rumah Zakat, Las Dompet Duafa, and Las Inisiatif Zakat Indonesia, where the assets under management are houses, land, buildings, physical equipment, and school. However, for Las Dompet Duafas managed assets in the form of revolving funds receivables taken from zakat fund, if adjusted to PSAK number 109, there are no guidelines. Because the revolving fund of receivables seen according to PSAK number 109 in paragraph 37 is only taken from infak or alm funds. That is the financial reporting of zakat management organization based on PSAK number 109. Thanks to anyone who watched this video until the very last second. May you always be healthy and plentiful. I'm Allan. I beg sorry if there is wrong in saying or mistakes on the visual context. See you next time. I love you guys. Wassalamualaikum.